Hey guys, less of a right. In terms of what we've done and what we're doing, right? It's a 2 monthly chart, right? Now, there's a couple of things that stick out, right? On a very simplistic form, and this is going back to the very, very basic kind of understanding of just how charts work, right? When you take out a high, you are expecting the high to really go past it, right? In kind of the motive wave. And I'm just trying to kind of almost dumb this down, right? Now, if you look at, I guess, what makes this red, what makes this green, right? As the highs are taken, right, this one here is taken there. The first candle that obviously is impulsive past it, right, actually turns to green because it was an impulsive move, right? Impulsive, impulsive, right? Now, obviously, the same really goes, right? Until we start getting kind of a lack of momentum to the downside, we ultimately turn red. So, in a nutshell, right, when you have, prices that do this, you clearly have a high, a higher high, right? This is a higher low. This is obviously a higher low, which points to an uptrend. Right? It's kind of as simple as this. The issue that I have, and the issue that I still have, and this is why I keep saying, nothing's changed, right, is we literally come up with no real form of a pullback, right? So, what have we done? We've come beyond this previous high, right? And so far, it looks like we're actually rejecting these levels. Right? So there's my first area of like concern, my first area of interest, right? And this is what I said, back 18 months ago in terms of why the three options were kind of critical as to how they play out. Will be beneficial, right? One will be okay, but a bit longer. And the third one was almost like diabolical. Right? Now, obviously, the issue being the first one didn't play out, right? Now, the first one obviously was at this particular point, we actually spend a bit more time accumulating that will allow us to go up, come back and test and go again, right? Guess what? Pattern I just drew there, right? What do you see? The issue that you have now, right, is the liquidity that's left on the table. And this is really, really important, right? Now, obviously, if you've watched this far, you're probably more interested in terms of what's about to happen next, right? Rather than, assuming that and kind of come in with, oh, look, the price has gone up, right? The reality is, it's how the price goes up. And this is crucial in any market, right? Forget the instrument, the type of instrument, the name on the instrument, right? This could be anything. Just look at the chart, right? So if I come back down to a monthly time frame, right, where I'm seeing this right now, stick this on to make this obvious. Right? What have we got? Well, we got clear liquidity above the 69k high. Right? We got a couple of gaps sitting in and around these regions, and we've got liquidity down here, right? So where's the prime, optimal target in terms of size of liquidity? Well, probably this one. Right? Now, the issue that we have here is if I was to draw a second line, right, just put it in the center of the box for now. We've clearly got, some interest down low as well, right? So for me, kind of the box of the box, this area here, right, is a very likely candidate, right? It's 25, 26, right? Now, if we drop down a time frame again, it's coming to a 1 weekly time frame, right? We've literally come up to the 69k high, right? We've had this kind of rejection, right? We haven't really closed, above this area, which was part of the reason for the concern, right? We've had no real pullback apart from this little move here, which was tiny on a monthly time frame. All the interest is there or lower. Right? So, a couple of things. I've talked about COT data, I've talked about the big boys, and the assumption for a lot of people, again, who clearly don't understand, is that BlackRock and the ETFs constitute as the big boys, right? Now, that's kind of partially true, right? But in trading terms, an ETF is an asset tracker, right? More than an asset creator, right? What you do have, you have leverage funds, right? Now, the biggest issue that I've had all the way up this particular move is we've gone up with relatively low volume, right? There's talks about, sale and manipulating prices and selling off stock, right? Now, all of these things are not good things for a much bigger picture, right? And this is kind of what brings me back to why I kept saying, nothing's changed, right? Without the larger scale accumulation, we have to come back for liquidity. Liquidity clearly, clear as day, pointing here, right? We've come up, we've tagged it, but because we come up in the fashion that we come up, we now have two of the three options left on the table, right? Now, I'm going to go back to the first option in terms of the larger scale accumulation. Right? I've talked about the larger scale accumulation. I would have loved to have seen that longer, 25K back down, a little bit more time in that region, up, back to retest and go again, right? That was the optimal move, right? So what actually happened was the two worse moves, right? The two kind of bad moves, if you will. These are still on the table, right? Because if we look inside the move, right, we've got a potential one. Let me get rid of this arrow. We've got a potential one there. Right? We then have a potential for a two. The only issue then is on this kind of time frame, right? Because this would have been completed 1, 2, 3, 4 and 5, giving us the bigger scale one, right? If this was our ABC, the next issue that we have is we've got to come from the low. We've got to come in, right? Even if we said a 1, 2, right? Potential 3, 4, 5, right? Which means we can't argue over the fact that this could be our 3. Now, in golden rules, right, in Elliott terms, 4 cannot breach 1. But we've invalidated 4 already if this was the situation, right? This is why these moves are, the worst of the moves, the worst of the options, right? So, in theory, we were potentially in a bear market, right? Now, I don't want to hear that. I don't want to know that. I've bought at 50K. I've bought at 60K. I want the price to go up forever, right? These are the issues, right? And these are the issues that you're going to be facing with an impulsive move that looks impulsive with no volume, no supporting kind of evidence to this, right? So, the option for me that I still prefer, and I think this is the best option for the bigger picture anyway, right? We've got two options kind of within the option, right? I've talked about the larger scale B, right? And this was ultimately the obvious B, right? We clearly had a test of it back down, right? But we didn't come down big enough into the region. Right? So let's assume that this was an A. If we look at the hyperextension of a B, we've come into the red zone, into the danger zone. Right? Now, there's two options which, are still pretty much decent options, right? But they're not what everybody wants to hear because they drag the price up longer, right? Although it goes up, it takes longer to go up, right? And this is the issue. So, if we were to assume this as an A, right, and we assume this potentially is a B, right, we could be seeing some kind of move inside, 1, 2, 3, 4, 5, right, which means we're going to have to come back down 1, 2, right, and then we're likely to come back up again, right? So, inside this move, the biggest issue that we have, right, is for a B to complete. The B could take us up to, I think it was about 83K, right? It's just about this area, right? And this would give us what they call a run-in flat, right? Now, the run-in flat ultimately gives us, one option kind of above, about 123% of wave A, right? So if I was to do wave A, something like this, right? This kind of gives us the region, right? This is the zone, okay? So this is still plausible. The only issue then is that we have to come back down, right? And we don't have to come down deep, right? But if we were to draw some extensions on this zone, right? No, the extensions into retracements, right? If I come back now and we retrace, let's assume that we get up to this kind of region, right? This is going to be 80, let's just say 83 and a half, right? Just for good measure, roughly there. Right? We can still come back down to any of these levels, right? It could be 57, it could be 49, it could be 41, right? There's an 86 and a 76 down low, right? Now, I've talked about this level, a lot of liquidity down here, right? This level seems to have a lot of liquidity. So for me, the lower bands are probably more likely than obvious, right? Now, I know this isn't what people want, is always going to come down to 60 and then we're going off to the moon, right? Guys, this is just being realistic and hyper realistic. These are moves that I talked about 18 months ago, right? We've done nothing different, nothing's changed, and nothing's changed for me in terms of what I've said, right? And I'm going to stick by this because what I've said is the three options, and the options were ABC, right? The options that we had would have been ideal, the perfect situation, right? And this is where a lot of people, like I said, don't seem to understand some simple logic, right? The obvious play was we spent, after this move here, we spent a lot more time in this region, right? If we were leaving this region now, I would expect that kind of move, right? And then we can impulsively break past the old all-time high. Instead, we got the impulsive moved up, right? And then we run out of steam. This is the issue right now, right? So if we go back up, we have an option, right? And this is definitely an option on the table. If we come back up, we've got a buyer's climax, right? Followed by the first move down. This is the AR. Right? So on a weekly time frame for a monthly move, we're going to potentially see some kind of test back up, right? Taking out maybe this high. We'll come back down for a sign of weakness, taking out this low. We could come back up for a UT or a UTAD, right? Before we start coming back down, which basically gives us, a 5, potential 3, or by 5, right? Completing the B. Then we come back down for the C, right? Which means the accumulation hasn't formally started. Which is why I said these options were much, much longer, much, much bigger, right? And this obviously is very hard for people to comprehend when they're looking at a 1 minute chart, right? So, in terms of where we are right now, we're still pretty much flat. You still need to wait for some confirmation either which way, right? If we break above this area, the 69K again, right? You want to see how it breaks above, right? If it breaks above and it looks like it can do this, it can come back for a retest and then we go again. The chances are we could be pinging 80K, right? 83K. You might have a bit of hype, but that could easily run, 85, 86, right? No problem. I think as we drop down, we've got to be looking for the kind of the AR type reaction on a smaller time frame again. I think we've already had that kind of AR. We've come back up for a move up, which was the back to 66, I think yesterday or the day before. And then ultimately kind of back down, right? So I think for me, this option is still my preferred because this one actually is the fastest of the two, right? In terms of prices going back up. Right? If we have the last option and the worst option, like I said, right? If this was impulsive, we've got to count this as potential 3, which means we've invalidated, which means A starts here, B comes back, and C which takes us way, way, way into the future. These are the kinds of things that you need to kind of comprehend. You need to understand, right? And you just need to look at behavior of price. We had COT data, right? Let me put the COT data on. We had COT data, right? Look at the red line here, right? This is the net shorts. We've had COT data increasing, right? As the prices come up, right? Now, what this tells me is the big boys, and I'm not talking BlackRock, I'm not talking about the ETFs. This is the leveraged traders, right? The ETFs are, again, they're much longer. I look at them more as the asset managers, right? These are the bigger players, longer term, right? There's a lot of retail type players that are still buying the ETFs, right? Maybe it's a lack of understanding, a desire for the exposure. Perhaps they think they're hedging Bitcoin by buying the ETF, right? God knows. The reality is, in terms of where the price is, what the price has done, right? We've got open interest on the leverage funds dropping, right? And we've got the net shorts increasing. A little bit of a clue, right? This isn't the big boys getting wrecked. This is the bigger players selling to retail players at a premium, right? I've just done this myself, right? I exited out, thought to myself, I'm not waiting another 2 years, 3 years for another 60K run, right? The reality is this was a nice little move. Take advantage of it, enjoy the sunshine, right? And ultimately move on to your next trade. In terms of where we are right now, right? Just keep this in mind. I think we're still pretty much in the same situation. We still have two options: up this way, right? Or up this way a little bit less and back down. Both options are not 100K, 200K, 500K because of the ETF inflows. This now is the difference between ETFs and the leveraged funds trading this on the smaller time frames, right? And I don't mean these guys are sitting on a minute chart trading this. These are smaller time frame returns in comparison to an ETF, right? So just keep this in mind. So anyway, I'm going to finish like that, right? For me, it's a brilliant, glorious day. It's time for some golf. So I'm offering to enjoy. You guys crack on, and I'll see you on the next stream. Thanks for watching all. See you soon.